Hey guys, thanks for taking the time to watch this hopefully relatively short video. You'll probably have seen the post that I put on X earlier on today about the gold and silver miners. And something pretty amazing is happening. And when I say pretty amazing, I'm trying to put it into a historical context. What I mean is that it is a historic, potentially historic event that is approaching. What do I mean by that? Well, as you know, we at North Star Bad Charts focus solely on technical chart evidence because we believe that all of the fundamentals, all of the narratives, all of the stories that you hear are priced into the price chart. And if you know how to interpret that price chart, what you're actually doing is you're looking at the overall views and opinions of the market as defined by all of its sort of market movers, whether it's the smaller individual traders and investors, or whether it's the much larger hedge funds, fund managers, and the whales, if you want to call them that, the big institutional money. So they often know things that we don't, and the price chart moves as a result of those things that they might perhaps be privy to in advance that we're not. And no matter what you think in terms of the stories and the narratives, it's pretty much impossible to be able to weigh all of them accurately, knowing which ones are going to be the ones that move the market in a particular direction. So, as I say, going full circle back to what I said at the beginning, we believe that the price chart holds the key because the price chart, along with things like the trading volume, with things like support, resistance, things like the technical indicators, it's like the heartbeat of stocks and shares. It's the heartbeat of gold and silver in the markets. And if you know how to diagnose the patient, diagnose the chart, then you can say something about what is likely to happen in the future. Okay, having said all of that, I'm going to take a look at. I'm going to share my screen first and start right at the beginning. Let me get my screen sharing switched on. Okay, and in this case, the beginning is the is the post that I put on X, and I said, "Wow, this could be massive for gold and silver miners." I'll release a video on YouTube later today to explain it. Hence this video, the blurred out image. Okay, well, we're going to take a look at what that blurred out image is right now, and that blurred out image is this. It's the gold and silver miners chart as a now as a if I was to overlay GDX onto this chart, and I'll perhaps just do that for you to convince you. Let me just stick the overlay on. Bear with me a moment whilst I do that. There we go. Add, and I'll add gold, and I'll just get the scale correct. Sorry, not gold. What am I talking about? Dear. Right, let's try that again. GDX, I said, didn't I? Okay. Here we go with GDX. GDX. Okay. And there we go. Right. So you can see why we use ASA. We use ASA because it has much more price history than GDX. And now that you can see GDX is, I'll just try and make it stand out a little bit more for you. Let me just maybe make that black and I'll make the line thicker. So you can see GDX tracks ASA absolutely perfectly precisely. Okay. As near as damn it, it's exactly the same. So where ASA goes, GDX goes, the gold mining index. It's just that we have much more price history to construct a technical chart. Okay, now those of you who know a little bit about technical analysis will have spotted the importance of the support and resistance lines. And this upper resistance line has contained the price action for the gold and silver miners since the peak there in 1980, early 1981 or late 1980. So we had a bull market in the precious metals during the 1970s, and the miners went up a lot. And then we had a bear market in precious metals that lasted until the year 2000. And then gold and silver went into a bull market and the miners rose, but they rose to a value similar to the previous highs of 1980. So nothing spectacular. And again, after the more recent bear market that took place after the 2011 peak, we have seen the miners doing well, but they're just back to where they were approximately in 1980 and in 2010, 2011. So big deal. The miners are a total waste of time, right? Well, that's not the end of the story. Yes, the miners have massively underperformed gold over this period because gold, of course, peaked at about $850 in 1980. I think it was something around that sort of value. Um, and then at this next peak here, gold was more than double that. And then at this next peak here that we're about to make, gold is another $1,500 above this peak. So whilst gold has gone up and up and up and up, the miners have not. But that's not the end of the story. Let's just have a look in a bit more detail at what happened to the um, miners in relation to the S&P during the first bull market in the 1970s. So this is the ratio of the miners to the stock market, the SPX, the S&P 500, and the ratio is going up and up and up. So that tells us in the 1970s the gold and silver miners outperformed the S&P. But this ratio here is the ratio of the gold and silver miners to gold. And what did that do in the bull market of the 1970s? It plummeted. So the gold and silver miners underperformed gold in the 1970s bull market. Now, you can argue reasons for that, and principally, I suppose, high energy costs, high oil costs, industrial action, and high labor costs, and all the rest of it, all of the things that miners don't want occurred here. So, whilst the metal went up in value, the actual end product of the mining, the miners underperformed gold by a huge amount. So in the 1970s, you would have overall made more money holding gold than a representative selection of the miners. Okay, now let's turn our attention to the gold bull era of the sort of period 2000 to 2011. So you can see the gold and silver miners went up. They went up from $5 on the index there to something around about $35. So that's a good move. But it only took it, as I say, back to that 1980s high. Now let's have a look at the ratio charts, and you can see that during this period, overall, they outperformed the S&P by a wide margin. And during this particular bull market, they, for the most part, matched the performance of gold until we got towards the end part of the bull market when the miners broke down before gold did and started to underperform. So that was the bull market or bull era 2000 to 2011, 12. Now turn your attention to what's happening now, and we're just testing this paradigm shift breakout line. I call it a paradigm shift because if the ASA index breaks above here, it'll be a technical chart pattern breakout on a massive scale, multiple decades building this chart out. So what happens here is either, in my view, a pullback and a breakout, or a breakout, pullback, and off we go. Those are the two most likely scenarios. Combined, I would say those two scenarios come to about a 90% probability, one of those two scenarios. This is the other scenario, which I would rate at a low probability, probably 10% or less. And what are the reasons for that? Well, there are multiple reasons for that. And not least because, let me just show you what's going on here. This is a downtrend that has been going on again from 1980. And that downtrend on the ratio versus the S&P is slowly starting to reverse. And the same with this downtrend here. Again, we are approaching the major important breakout line. So, and in addition to that, we have a lower breakout line here that we're just about breaking out of now. I'll just do that. And we've got also a similar breakout level here. So what I'm saying is that the ratio versus the S&P and the ratio versus gold has barely shifted yet. We barely started to outperform the stock market, and we barely started to outperform gold. Now that's in contrast to what happened on the two previous occasions where we massively outperformed gold. And in the case of the 2000s bull market, we also outperformed um, the, sorry, say that again, we outperformed the S&P, and in the case of 2000s bull market, we outperformed gold in the approach to this resistance line as well, and that hasn't even really started yet. So for to have a bull market in the gold and silver miners, you need to have an outperformance either versus the stock market or versus gold. And that has barely happened on either of these so far. All we've had is a tiny little uptick. So given the fact that gold has moved from $1,800 to $3,500 in short order, and gold is entering a bull market, well, it's in a bull market, it's entering a bull era by breaking out versus the stock markets, then it is highly likely that we get a breakout through this paradigm shift breakout line. And if we do, we've got so much fuel in the tank for an upside move. We could very easily do a move like that where the gold and silver miners outperform the stock market and gold to a large degree. And given the fact that some of the miners have moved hundreds of percent already, you can imagine what a breakout through this multi-decade breakout line is likely to mean. It would be off to the races for the miners, and your guess is as good as mine just how high and how much these miners are likely to increase in dollar value. But the important point to note here is that not only is the miners going to be outperforming the dollar, but outperforming the stock market and outperforming gold and silver as well. And during this period, I expect silver to outperform gold. So gold going up, silver going up by a greater percentage, and then the miners outperforming gold, silver, and the stock market. So all of that will be determined by the reaction in this red circle. So as the post says on my X feed, this is a massive, massive inflection point for gold and silver miners. And should we pass through this line and get a monthly and then this is a quarterly chart, a monthly and then a quarterly breakout confirmation, then we are truly in a new paradigm where the low valuations of the miners that go back all the way to the 1980s, we've seen huge amounts of inflation since then, but the miners are still just valued at what they were back in 1980. All of that will be in the past and behind us, and then there'll be a repricing to whatever new level, and it's likely that we would go up and then back down and form some sort of a base at a higher level, a higher plateau compared to where we are now. So that is a real massive moment, enormous moment for gold and silver miners. So if you're trading or investing in the precious metal space, this is the chart to watch. And it's the chart that you don't want to ignore. You do not want to miss this opportunity because some truly sort of life-changing gains can be made in these environments. Okay, I hope you found that really useful, helpful, and you're able to take some advantage from this and use this information. I'll keep you updated on my Twitter feed, on my X feed, and for website members, of course, we have regular updates. The weekly Market Roundup podcast, which I'm about to record for members, which covers 100 or so instruments right across all markets: precious metals, base metals, cryptocurrencies, currencies, energy, oil, soft commodities, stock markets, you name it. So I'll be recording that shortly. And also, of course, we have the miner cast for our members where we cover more than 50 or 60 miners now. and we're going to keep tabs on those as well, with trade suggestions continuing to be illustrated in those podcasts. So thank you very much for taking the time to listen to this, to watch this, and I'll speak to you again very soon.